You're listening to the Breakaway Wealth Podcast, the show that helps you build wealth faster, think outside the box, and break out of the herd. Here's your host, Jim Oliver.
Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today, Chris Shockowitz. Welcome, Chris.
Thank you. Well, glad to be here.
So, audience, today we're going to talk about everybody's favorite subject. Maybe it's your favorite subject if you've got it handled. It's not your favorite subject if you don't. But we all need to do it, and we need to have good tax strategy, good tax planning. And what if there was a way to reduce your tax bill? Would you want to know about it? And when would you want to know about it? Well, guess what? Today's the day. Chris, tell us a little bit about yourself before we jump into one of my favorite topics on how to save taxes.
All right. Well, my name is Chris Shockowitz. I'm from Reno, Nevada. I'm a tax strategist with deferredtax.com. And what we do is we basically help people reduce personal income taxes, business income taxes, and capital gains taxes. My background, I used to work at Intel Corporation. I worked there for 25 years, director of application development in IT engineering. Had like 140 people, had like a $40 million budget. And one day my manager came to me, who was a VP, and said, "Hey, Chris, we're going to lay off your team and send all the jobs to India. And we want you to do that. And then please stick around and we'll help you find something else." And I said, "F you, I quit."
Yeah.
I'm not going to, I knew every single person, right? And so then I was looking for something to do. And that's how I kind of ended up in the tax strategy game, because I was selling some property. And I didn't do anything brilliant. I sold this property in Santa Clara, California. I bought it for about $600K, sold it for 1.7, had a huge tax bill. I was interviewing realtors for the sale. And one of them said, "Hey, I know this guy. He can reduce the taxes on the sale of your house." Well, he and I kind of hit it off. I had a 1.2 million gain. I paid no tax on it in California. I'm still collecting income from it now. That was in 2018. And essentially, he and I just hit it off, and he started teaching me everything he knew. And now we're in business together, teaching tax strategies.
I love that. And, you know, most of the audience knows that I've got multiple businesses. And one area that every year about this time I'm frustrated with is taxes. And what is my strategy? And every year I say to myself, 2026 is going to be different. I'm going to do things differently. And when I ask people, like, "Hey, what system should I be using? What should I?" And then, you know, cost segregation, great. I mean, I know all these things, right? But like a system where not just I talk to this person once a year at the end and they're like, "Oh, Jim, guess what? You got $1 million of tax due," or something.
Yeah,
like,
right.
No, I don't want to have that conversation.
Right.
I
Well,
want to have the conversation which, "Hey, Jim, you're in great shape."
Yeah.
So
Well,
tell me.
Okay.
Yeah, I mean, just like, let's just start. What are some of the strategies, or what you can do to help my audience save money on taxes?
Yeah, I think the first thing to do is to understand that tax preparation costs you money and tax planning saves you money. Tax planning happens before the fact. Tax preparation happens after the fact. Most CPAs, and I'm not knocking CPAs because there's some really good ones out there because we work with them, but at the end of the day, if you're looking at history, all you can do is report history. If you're not getting in front of it, you can't change it, right?
Totally makes sense.
So what you do today can change the future. It can't change the past. Sorry, that's just reality, right? So what do we do? Well, let's talk about income taxes. I just got off the phone with a guy. He's a pediatric orthopedic surgeon in Washington State. He's making north of $1 million. Most surgeons working for hospitals, they're W-2 employees. That they're doing. This guy did 15 surgeries in one day. He has to miss his kid's birthday party, and he has to get called out on Christmas because of an accident. This guy is really, he loves his job. He loves helping the kids, but he's also paying $400,000 a year in taxes. And he's saying, "Okay, I really kind of give at the office. There must be a way to save money." And so we have ways for high income earners basically to cut their tax bill by up to 50%. And that's just on the income side. And that works there's basically three kinds of income. There's active income, passive income, capital gains income. So on the income side, we have stuff that starts at about a 500,000 income where you can start to cut that tax bill in half. If you're making 250K and you've got some IRAs and you want to do Roth conversions, We can do the Roth version to get you to the 500K, and then basically do that Roth conversion essentially for free, because we can cut the tax bill in half, right?
Right.
Through an investment strategy. So we have multiple different ways of doing this. Everything we do, we have multiple ways of doing it. And when I meet with a client, the first thing I do is to say, what is the asset that you have and what are you trying to accomplish? And then I start to share with them essentially what they can do. And like, for example, I had a real estate investor just earlier in the week, would be yesterday. So I was talking to him and he's going, yeah, well, I'm going to do a 1031 exchange, but I don't really want to buy another property. And I went, okay. But he goes, but I know I have to. And I go, first off, let me stop you there. No, you don't. You can actually exit a 1031 exchange, put your money into a cash account, go reinvest it any way you want, not pay any tax. Would you be interested in hearing how that works? Right. So for real estate, we've got 17 different ways of doing things that would reduce your tax bill. For your income, we've got basically 5 different things you can do. And they're not the average thing. If you go on ChatGPT and say, hi, I'm a high income earner, what's the top 3 ways for me to save on taxes? Those are the basics. We'll blow through those. And then we'll go through the others that you can basically, compound upon that. What I like to do is to say your CPA, I want to work with your CPA. We are not CPAs, but we're tax strategists. We're actually, my licensing is an investment advisor, but we love working with the CPAs. And either, we're going to have one that wants to grow and learn more, or we don't, and you've outgrown your CPA. I mean,
yeah,
it's kind of that simple. Some people want to do the Mark Plus stuff, and some just want to crank out returns. So you have to find the right person for your situation. If your CPA, if you're saying, I paying so much in taxes, and your CPA says, oh, that's a good problem to have, you just outgrew your CPA. Right?
Yeah.
So we basically need to look for somebody else that's going to take you to the next level. Just like if you're in sports, you've got a coach that gets you so far, then you got to go to the next level. Where we're kind of that next level coach.
So, it's funny about what you just said, a couple things. One is, we teach people how at Create Tailwind, one of my companies, we teach people how to do infinite banking, where you put a bunch of money in a whole life policy, use the insurance company's money while your money grows tax-free, and you go buy cash flowing assets, and then you flow it back into the policy, pay back the loans, or just keep reinvesting it, either way. But it's an interest-only loan. And if I talk to a CPA and they say, well, you can't deduct interest when you're paying it to yourself. And I go, out, check, because you don't realize that's not my money. It's the insurance company's money.
Exactly.
They're a large financial institution. Every large financial institution that I pay interest to, for a deductible reason, I can deduct. So that's number one. Number two is if somebody says, well, I can't take money out of my 401k or something and put it into that because I'm going to pay tax plus 10%. Well, you haven't even asked me what I'm going to invest it in. So if I invest it in real estate and I do a cost segregation, I'm going to pay 10%. How many people would get out of their government-controlled 401k or IRA for 10%? Everyone.
Or self-directed, right?
Or self-directed, right? Yep. Everyone, though, would get out of it if they understood what was happening. Because nobody would put money in something where you don't understand the tax consequences 20, 30, 40 years from now.
Yeah.
Nobody.
I'd like to say essentially an IRA is an IOU to the IRS. And what you're going to pay in the future. By the way,
Chris, I'm just telling you, I'm going to steal that.
Yeah, no problem.
So I'm telling you up front. When you see it my Instagram and it says, Jim Oliver says that a 401k is an IOU to the IRS, he's going to say, I gave him that. But I'll give you credit. Okay, so the other thing about CPAs, and audience, this is so important. Man, it's so important. There are so many CPAs, the majority of them, they are going to go black and white because you're not going to fire them. You're not going to fire them. Most of you are not going to fire them if they just do it straight down the middle of the line. Because if you're innovative and they think, well, if something doesn't work out, or I don't know about that idea, then all of a sudden, or you're going to hire this tax strategist, or you're going to do infinite banking, and they encourage you not to, then you got to fire them if you don't want to be part of the herd.
Yeah.
If you're fine being part of the majority, and remember, the majority's never been right about anything in this country.
Yeah.
Anything. You have to break away from the herd. You have to do things like Chris is talking about.
Yeah, all right. One of the things we do also is everything we do is 100% legal. We're not, there's basically a right side of the line and the wrong side of the line. We are on the right side of the line. Sometimes we're close to it,
Yeah.
but we are always on the right side of the line. And we basically only work providers that we vet. So basically, somebody has a very interesting thing with depreciation right now, but we won't do it because they're new. They haven't proven it, right? So we're basically looking for companies where the founders are still involved with the companies. We're looking for them investing their money alongside your money, because if they won't put their money at risk in their own deal, then why would you, right?
Yeah.
We want a track record and a history, ideally over 10 years. Ideally, they've
Yep.
gone through something like the financial crisis and they've survived and paid their people because they know what they're doing. They realized how to protect their investors, right? And ultimately, we're looking for things that have been audited or that the team has a track record with audits where they've successfully passed them. Like we have a guy has a 10-year track record of doing something similar to a conservation easement, right? But they've been doing it for over 10 years, done it 26 times, never paid the IRS a penny, right? So those are the kind of players we're looking to work with. So if I wouldn't put my money in it, I'm not going to put your money in it.
I loved what you just said there, because again, not comparing what you're doing to infinite banking, but just as there's some great marketers out there about infinite banking that have never used it to buy a business, never used it to buy real estate. They're really good marketers and they can talk about stuff. And there are people online and they want to be all secret and they want to talk about revocation of election and all that stuff. And you get pulled over by a cop and you say, nope, the trust owns this car, that I don't have a driver's license yet. I'm okay to drive. Like, oh, what's your name?
You're going to jail.
I mess up one time and I say, my name's James Oliver. And they go, boom, busted, got you. Now you're going to jail for 10 years. Yeah. I mean, who the heck wants that?
Yeah.
Nobody with any money. Because I don't care how much money you're going to save me if I'm going to jail for 10 years. I don't want to do it.
Yeah, exactly.
And so, like, those kinds of things are out there, though, Chris. And I know you run into them more than I do. And I run into them all the time. And it's like, okay, put this, and I'm like, and I had a business partner that was going to do it. And I said, listen, I'm older than you. And I'm telling you, I know people that have gone to jail for this.
Yeah.
Because they screwed it up. Well, if you don't screw it up, you want to live your life like that, where if you go to court, you go to something and you say James Oliver and you're done. I don't.
Yeah, exactly.
And then, there's all this Instagram videos of, somebody getting pulled over. The trust owns this car and I am allowed to do this because I get it. But one slip up, and I'm not that detail oriented, right? Like, I'm about 80%. That gives me a 20% chance of screwing it up.
Yeah.
And so I don't want to do that. Okay, so take somebody like me. Okay, I own these different businesses. A lot of them are little businesses based in crypto mining. Not a lot of them, but maybe half. And other companies are pretty basic: refurbishment, forward logistics. I mean, those ones are simple. But there are things maybe I can do with those companies that can save taxes too. But somebody like me, I'm not talking about what, particular advice, because obviously you don't know my situation enough to tell me that.
Right.
But what would the process if I wanted to work with your firm?
Okay. Two answers. So the first one would be the business level answer. What I would want to do is start with structure and basically see what are your businesses, how's the money flowing, what's your ultimate goal and purpose with the money, and then essentially we would design the structure for the businesses, because basically you can save a lot of money just on structuring things correctly. The right LLCs, the right S corps, et cetera. And maybe, if one of your companies manufacturing, well, let's talk about the S corp and you hold it for 5 years and sell it for no tax, right?
Yeah.
So there's various different angles. It depends on what you're doing. Then once we've got the structure down, then we say, okay, well, how much money is ultimately flowing through the structure and where does it come out? And when it comes out, what entity does it go to? Is it going to you as a trust? If you've got more than one business, you should have different LLCs and you should have a living trust, right? So, how does this whole flow structure work? And then, okay, where are the basics on, based on protecting the income through expenses, through, if you're big enough, your own insurance instead of paying insurance companies, or essentially retirement plans, et cetera, et cetera. So we kind of max out all those things. And then we go, okay, well, based on the income that's left over, then let's start knocking down the capital gains, the ordinary income, or the capital gains, or the passive gains, et cetera, depending on, are you generating depreciation, passive income, active income, etc. So basically, we take layers to the plan. First, we're going to structure it right. It's 4-year objectives. Then we're going to basically look at doing this, what I call the standard things to reduce your taxable income, and then working in partnership with your CPA. And then essentially, then we'll go to the next level and say, okay, how do we knock all of this down to the bare minimum legally? That's kind of a high level flow. Now, one other thing
if I wanted
to hit,
a CPA, you have CPAs that you vetted, that know your system, know what they're, like, because to be honest, and I'm just saying this for me, audience, is I don't want you to have to train my CPA, because that sounds, what I see as a big bill there from them, right?
Yeah.
is I would rather change and work with somebody who already knows this system, and that I don't have to retrain. You know what I mean? I'm paid to be trained, right?
Well, we do have, the one thing about the CPAs is that it is somewhat dependent on the state.
Okay.
So in your situation is probably big enough where it wouldn't really matter, because you're probably working in different states anyway, right?
Yeah.
So
I'm all over the board. I mean, I think my most of my corporations are domiciled in South Dakota and Iowa, but again, I just had somebody set up a corporation, and I told her, set it up in Delaware, because the whole thing is, you don't know today the thing I like about Delaware is you don't have to say who owns the corporation, or who the member of the LLC is. So, like, is that a big deal? Might not be today, but it might be someday.
Yeah, someday. Yeah, there's also Wyoming, right?
So
first, let me get to the full answer though. Yeah. So there's that structure, right? Now, specifically, we look at each business and what they do as well. So, for example, if you have a crypto mining business, how would you like to be able to sell your crypto, pay no tax on the sale, and then be able to put that back into your other business and still not pay the tax bill?
I would like that a lot, Chris.
So we have something we call it the DeFi Wealth Trust. So we have various different trusts for different scenarios. Depending on the asset, we have different solutions. So the one for crypto is essentially you set up an LLC that's going to own the keys, and we have a trust that basically buys that LLC. Now, ideally it's a single member LLC, taxes as sole proprietorship, has its own EIN number. We buy that LLC, and then you have 6 months to basically sell the crypto. You DCA in, you DCA out, right? So when you DCA out, we basically put it to a stable coin and then move those in tranches into this trust. The trust essentially owes everything it's taking in to you. So basically when the trust buys the LLC, it does it on an installment sale. It basically gives you a note. That note is a demand against the trust. The trust owes everything in it based on the note to you. So the trust pays no tax. You took an installment sale, you didn't take possession or control, so you pay no tax. So now that money's sitting in the trust, and we can go and reinvest it in stocks, bonds, mutual funds. You could put it in real estate, you could put it in businesses, you could do hard money lending, whatever. We basically do this through doing a partnership LLC between the trust and you. Because that partnership LLC is not you, you can have control of the money, control as the business owner, because you're the GP. The trust is an LP, they fund the enterprise, and then you go do what you want to do with the cash. So that was a very quick rundown of something fairly complicated, but I can tell you understand.
I totally understand. And by the way, where my brain went, and I'm just going to, audience, I'm transparent. I already decided I wanted to work with Chris before that comment, but now I really want to work with Chris. And not just me, but my business partner who writes for Bitcoin Magazine. And, we own together a company called Barefoot Mining that has all these companies under it. But Bob Burnett, my business partner in those ventures, is very big in the crypto world. And if he's not top 10, he's top 100 as far as people in the world on this. And we do all of these gas and little huts around the country that were so my point is that there's a lot of stuff right there. And so not only for our companies, but I'm a huge relationship reciprocity guy. So you help us, we've got I don't know how many people connected for you to help as well.
Yeah.
And I always believe, Chris, I really like how you got into this business, because you got into this business kind of because you had a problem.
Yeah,
right?
exactly.
And then you found people that could solve your problem, and you believed in it so much that you decided you wanted to help people solve the same problem. And
that's
that's
exactly why
about the
I'm
most
here.
honorable, genuine way to get into a business. And I'll give you an example of that is one of my mentors, Nelson Nash, who passed away in 2018 at 88. He was, it was 1980, or I could butcher some of these numbers, but it was around 1980. He owed $500,000 for real estate. He was paying 22% or something like that interest. Yeah. And he was on his knees praying, like, God, show me a way out. And his brother was in the life insurance business, and he had sold him what Nelson considered to be too big of an insurance contract, right, at the time. And it came to him, God gave him this message, according to Nelson, that, hey, you got all this money sitting in the life insurance contract that you could borrow out at 7 or 8%.
Yeah.
And so he paid off the debt and saved all this money, but that caused him to do what you did, which is, who knows about this?
Yeah.
Who's teaching this? How can I help people learn this? And that was 1980, right? So 50 years almost ago. 50 years? Yeah,
45.
50 years, pretty much 50 years. Yeah. And he helped so many people doing that. So I love that you got into this business that way. I love what you said. I really, really do not ever want to be in a gray area with taxes. Yeah. I want it to be black and white, and I'm okay being as close to the black as possible. Yeah. You know what I mean? Like,
but on the right side of the line.
But on the right side of the line. I don't believe in gray areas, right? Yeah. Like, I've invested and I've taken tax breaks in gray areas. And I would tell you that it rarely works out in my favor long term.
Yeah.
But, the other thing that I would say is that do not be afraid of an audit just because some auditor calls you. Sometimes they're just clarifying some numbers, right? Yep. It's not like a full, whatever they call that. I've done both. And by the way, when I did the full audit, of course, they're not going to negotiate. You owe us this much money. It shows that you don't.
Actually,
so
they
go, yeah, we're not going to accept that.
They do.
And then you go, okay, let's go to tax court for $60. That's what it cost when I did it.
Yeah.
And then they go, okay, you want to negotiate?
Yep. Exactly.
Because they know that your attorney's better than their attorneys.
Yeah.
Right. And my attorney happened to be out of Vegas, and he was like almost 80 years old, and they knew who he was. And so I got 600 taken down to 100, and I couldn't write the check for 100 fast enough.
Yeah, exactly.
Right. So my point is that the IRS is not something to be feared. And the reason that Elon Musk gets paid in stock, and the reason that Donald Trump is such a terrible businessman because he lost $1 billion over 10 years, according to NBC News, because he's just a horrible business person. But we would all trade our lifestyle for his lifestyle.
Yep. And that guy's worth like $60 billion.
They understand the tax code.
Yep.
So audience, you got to find people that understand the tax code, like Chris. And Chris, I'm in awe, and it's a pleasure to meet you. And people that are out there trying to help people do things the right way, but also because people don't know. They don't know what they don't know.
They don't know what they don't know.
What's available until you understand it. Nobody's going to go learn the tax code.
Yeah. Well, I don't know it all either. I mean, I work with really smart people is the whole thing. And that smart guy might know, one section. But what's very interesting about the tax code is, number one, everybody, what is the tax code? If you look online, it's the statutory rules that are set out by the IRS called the tax code, which tells you how much you owe in tax. And that's true for about 10% of the document. The other 90% is ways to save. Now, why do they do that? Well, because when Americans invest in America, we, the people, win. When you go drive down the street and you see all the infrastructure in your city, somebody owns almost every damn piece of that. How do they own it? Because they know how to use the tax code, and it incentivizes them to go invest in America. When what do you get a tax break for? You get a tax break for getting married. Why? Two people economically are stronger than one, and they have kids. Why do you get tax breaks for kids? Kids are future taxpayers and probably the biggest driver of consumption in the country. Why do you buy a house? Get a tax break for buying a house because you now have ownership in your community. You start to give a shit about where you live. Why do you get, tax breaks for owning a business? Because you're hiring other people and you're basically driving, demand into the economy. Businesses are one of the biggest consumers of resources, right? So all of these things exist to make the company stronger and to make it grow. And the people who originally did it were pretty brilliant. But most people don't learn in school that, people make money in this country in general one of three ways. Either they're really good at something like a doctor or an engineer or something, and they're getting paid a really good W-2 salary, or they own real estate, or they own a business. So if you're not doing one of those three things, change your life. And economically, it will change your life.
I love that you said that, because I always tell people everything that you've been taught about money is a lie.
Yep.
Because this is what we were taught. I'm 60, Chris. I don't know how old you are, but like I was told, go to school, work, get a job, work hard, save money for 40 years. And then the carrot was you're going to be able to play golf the rest of your life, whether it's 3 years or 14. Because you we're so stressed out for 40 years, right?
Right.
And then you die, right? And that is such a lie, because if I were 20 years old again, I'd be out trying to get somebody to sell or finance me all the real estate that I could buy.
Yep.
And then I would buy businesses that somebody in their 60s wanted to sell or finance, because all they want is cash flow for the rest of their lives.
Yep.
And I would build an empire by the time I was 30, and I'd be playing golf around the world, traveling wherever the hell I wanted to for my whole life with no stress.
Yep.
Or a lot less stress.
Yeah.
That's the truth about money.
Yep.
And you always know somebody like that. Every single person listening to this, you might not know what they're doing, but you're like, what the heck are they doing? Everything they touch turns to gold.
Yeah.
Now, that doesn't mean every business that they buy turns to gold, or every real estate project is a home run.
Yeah.
But if I buy 10 real estate projects, my batting average will be 800.
Yeah.
Because I'm going to make a mistake on one or two, right? Yeah. But it's going to be at least 800.
Yeah, so I've done up to 85 doors of my own money, in San Jose, so it's quite expensive property.
Yeah.
When I was working at Intel, I was using my income from work to basically go work on real estate projects. And I had a cousin who told me to exit before 2007, so I did. And I paid a ton of taxes, and because I didn't know what I know now. And then when I met my current business partner, who basically at 18 years old, he started putting $25 a week away. And by the time he was 30, he owned 4 basically rental properties. And he did it from literally nothing, from his dad. Well, I won't get into all that, but he basically had some very significant financial hardships. And so you can't say, well, you started off with money. Now, this guy started off with literally nothing, and he just took half of every raise and put it into a savings account. And then he finally got that first property, and then he got the second one, and then he ended up having 3 of them. And now he's got like 42 properties.
So, what's really cool about that, when I was, what you just said about your business partner, when I was 13 years old, I grew up in foster care. I was adopted into a really abusive family. And I worked in, it started off in El Segundo, then they moved it to Compton, California. And it was, when I started working there when I was 13 in the summer, and it was a casket factory, right? And forget about that I had to swing a hammer for 8 hours a day, and how to figure out how to do that with both hands, because you cannot do it with one hand at 13. Yeah. I would see all these people sweating all day long, working their butts all day long, exhausted at 3 o'clock in the afternoon. And then I would see the business owner walk in. I didn't know what he was doing. He'd close his office door. He'd be there 2 hours, and then he left, right? Yeah. And then, but I knew he lived in Palos Verdes. And if you know anything about California, Inglewood, where we lived in that area, and or Compton, you'd rather live in Palos Verdes than there.
Yeah.
Okay? So he's doing something right. So I'm watching, right? And I'm curious, but I just wasn't smart enough to get it all to come together. So then one day I'm walking along a street in unincorporated LA. I just happen to know that it's not part of any city there. Now it's under a highway. Anyway, off of Imperial Highway. And I looked down at this guy pulling weeds in this kind of rundown house. And I looked down, and it's Dwayne McIntyre, the guy that owns the casket factory. And I said, "What are you doing here?" I'd like to say I was very respectful, but I probably just said it like I just did.
Yeah.
And he said, "Oh, hey, Jim, I own this house." I said, "Why do you own this house when you live in Palos Verdes? Why don't you own real estate up there?" He said, well, actually, I own real estate all over the Los Angeles. Okay, so at 13 years old, Chris, I learned everything that I needed to know about being successful.
Yep, right there.
Everything. And I wasn't smart enough for 20 years. Took me 20 years later to go, ding, 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 ding. And, but I went to public school, Chris, and I was a solid 1.2, 1.3 student there. So, so I know why I wasn't brilliant. No, I'm just kidding. But my point is back to what your business partner did. And that's why this show exists, and people helping other people. So let me ask you two questions as we kind of wrap up. Is one, what's the best advice anybody's ever given you, Chris?
The best advice anyone's ever given me? Well, I was going to San Jose State University. I had like a take-home test. I was in an honors chemistry class, and it was a really hard test. And I was complaining about it at the kitchen table. My dad walks in, and he goes, "Why are you doing that? What are you going to do with your life?" That was the best advice I ever got in my life, because I went, yeah, what am I doing with my life? Why am I doing this? I don't really want to be a chemist. Why am I even in this class? And so what he didn't like is then I left school and I went to work, and he was pretty pissed about it. But it took me a little while. But then after a while, I decided, okay, I'm going to go back to school. I'm going to get my degree. Then I worked in Intel Corporation for a long time and blah, blah, blah. So anyway, long story short, that was the best advice, because if you're not really looking down the road and saying, what do I want to accomplish? You would be incredible, the people that have some pretty incredible net worth. And I'm saying you're selling, let's say, a significant piece of real estate. And we're talking about, and the first thing I ask him is, what do you want to do with the money? And he goes, if there was no taxes, no limitations, what would you want to do with the money? And some people immediately know. Like one guy said, I would ride my mountain bike every day. Go, okay, let's see how to do that, right? Another guy going, I don't know. I go, okay, this is the most important question. Where do you want to go? What do you want to do with your money? And if I could just help somebody answer that question, I don't care if they work with me or not, I did my job,
I love that, because what I say to people is, when I get really worried about people, is I ask them what their vision is. And that's kind of what you're asking, right? And they don't know. I get worried about them.
Yeah.
If you're in a marriage and you don't know what the vision of your marriage is, be worried. If you're in a business and you don't know what the vision of your business is, be worried.
Yep.
And I say it this way. When I'm trying to make a big decision, I play the movie forward. If I make this decision, play the movie forward.
Yep.
If I make this decision, play the movie forward. And, I'm a single guy. I do that with people that I'm dating. And it's like, if I can't play the movie forward, as much as I like spending time with that person, it's not the right person.
Yeah.
And if you don't have a vision, the Bible says a man without vision is lost, right? You're lost. But I have a vision board. The reason I keep looking over here is on my wall, I have some of that paint that you put on the wall and you can use dry erase marker on. And I have a whole vision board. And I've got everything. I got business and finance, spirituality and mindfulness, health and wellness, travel. I just saw a picture of a guy, 80 years old. And I'm into fitness and eating right and everything. That's the California, I guess, in me coming out. But this guy's 80 years old. I'm not saying I'm going to be on stage posing in a bodybuilding contest, all right? But this dude is up there. He's kind of dancing around. He's, showing his muscles. 80 years old.
Yeah.
And I'm like, okay, I'm 60. I want to look like that dude, my version of that dude, in 20 years.
Yeah.
And just the way he's moving.
Yeah, if you don't have your health, all the rest doesn't matter.
Yeah, you can have all the money in the world, and the guy that has all the money in the world, when he has bad health, would trade every dollar for that. And the other thing is to think about when you want to talk about money is I spoke at this event, and this guy flies in, and he's got $55 million jet. I can't remember what it was, but it was amazing. And because he offered me a ride home, and I said, man, I got to go up before you, like that, or after you. Like, why am I going after you? And he got up there and he told a story about his daughter dying of an asthma attack. And, this guy's well known, and, he went through all of his assets, and he said, I would give up everything I own for 1 hour with my daughter.
Yeah.
So wealth is not about money. It's about freedom. And like you said, ride my mountain bike every day.
Yeah.
Right? Play golf every day, go fishing. But what you really are saying is, I want to do what I want to do when I want to do it with whoever I want to do it with.
Yep. And
I love that, because I have that thing, and I'm super grateful. And I sometimes look and I go, yeah, I could play golf on Thursday. Sure. Yeah. Okay. Put me in. Like that's the biggest decisions of my life. Are we going to play in the morning or the afternoon?
Right. Yeah.
All right. Last question. If God came down from heaven and allowed you to only to retain the knowledge that you've received from one book, Chris, what would that book be?
I've actually authored some books. So we've got one in flight, and I think that would be the one, which is our book on taxes.
Great. So that's okay. So we're going to put that in the show notes. Chris, tell somebody that doesn't want to wait. They just want to order that book right now, like me. So how do I order it?
Yeah, I don't have a way to do that yet, but
okay.
But we do have, our company, defertax.com. You go to the website, defertax.com/Chris. You can get in touch with me.
Perfect.
I did want to hit a couple of things real quick.
Yeah, go ahead. Yes.
So some of the things we do that are pretty spectacular are really in the real estate space, not just the business space, but you can actually sell your business, pay no tax on it, just like the crypto. Basically, we have some stuff you can do with real estate. So like, for example, if you're familiar with 1031 exchanges, you sell a piece of real estate, you have to buy something of equal or greater value. We've got multiple ways to basically do that and defer the tax bill. However, let's say you want to sell your real estate and go buy a primary residence. You want to sell your investment property. Can't do that with a 1031 exchange, right?
Right.
I can do it.
Nice.
And basically, there's a way to cash out of that 1031 exchange, get tax-free cash, and you can go do anything you want with it. Since I live in Reno, I like to say you can go to Reno, put it all on black. But what you can also do is, if you're growing, instead of just trying to slow down, you can actually go through that 1031 exchange, keep the depreciation from your original sale, because the depreciation schedule on the relinquished property basically goes into the replacement property, right? Well, if you got cash out, you can now go into a new piece of commercial property, and now you can actually restart the depreciation schedule on the new purchase, because it's free money, not encumbered by a 1031 exchange, and you can do bonus depreciation, basically cost seg. So instead of carrying forward a depreciation schedule that's not going to go up when you buy a more larger property, you can actually have 3 depreciations: your original one, the new one, and the cost seg. Very powerful.
All right, so audience, also let me change your paradigm on a couple of things that Chris just shared. Let's say you're 25 years old, you're listening to this show, and you have nothing, but you want to go buy a business. You think if you go buy a business and know the things that Chris is talking about, that you're going to be able to get that person to sell or finance that business a lot easier than if you're just in there saying, hey, you want to sell or finance this?
Yeah.
Number one. Number two, when you're buying real estate from someone and you don't want to put any money down or very little bit of money down, and you can bring these strategies to the table. So if you are a real estate investor, you don't have a business to sell, but you want to go buy some businesses.
Yeah.
You still should hire Chris to help you. You're going to be able to come up with strategies to go buy those businesses. And if you're a real estate investor, I know I say this over and over again, you're in the real estate business. Yeah. You're a business owner. You're not just some investor. Okay. So you're in the real estate investment business, whatever that means to you. But the biggest thing is people do not know why they should sell or finance.
Yeah.
And what is the business broker going to tell them to do? Don't do that. Right? Yep. What is their realtor going to say? Don't do that. Why? Because they don't get paid.
Exactly.
I mean, they don't get paid.
And the realtor, they can't give you tax advice.
And they can't give you, Chris, I have a really good friend. He's a great guy. And he was trying to convince me, because there was a house coming up for sale. The guy was like a fire sale, blah, 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 blah. And I said, I don't know, rates are, he goes, why would you have a mortgage? I said, well, because I can go out and make a lot more money with my money than what I'm going to pay the mortgage.
Right.
He goes, well, I look at it differently, Jim. And he pontificated for like 3 minutes. And I was like, you lost some credibility with me because
because what you just said was not smart, right?
Yeah, what you just said was not smart. What is the equity in your house worth? This is going to be my primary residence. It's worth nothing.
Yeah.
It is not an asset.
Unless you sell it.
And I tell people a story. I had a great house up in South Dakota, tons of equity in it. And in 2011, the Missouri River flooded. They put a levee in my backyard. You know what and this is just one example, but you know what the equity of my home was worth then? 0.
Oh, yeah.
And what I wish that I had no equity, because if that house goes down the river, then I take the keys over to the bank and say, here's your house.
Yeah.
Sorry, it went down the river.
Yeah.
See you later. You know what I mean? Like,
and they take a write-off against their profit versus you're losing, whatever it took for you to get that house.
Yeah, I mean, leverage is everything, right? Yeah. I mean, it's everything. And then, you have nothing, like your business partner, you go out and buy one property, you do this and this and this, and now you have some equity, and then you borrow against that equity to go buy something else. The banks aren't bad. They're bad when they control you.
Yeah.
When you control the bank, they're great. Yeah. Whoever controls the money makes the money. And so, Chris, I always say we're going to go like 30 minutes, and now we're at 41. And so I guess we need to wrap this up. But I would like to, audience, and give me feedback. Like if you want us to do an hour workshop with Chris and his team, like in January, February or something, like, or whenever, like somewhere in the future, tell me if you want Chris, like if there was a course online on our community, how much would you pay for a course to learn this stuff or learn the basics, or some, like 3 concepts that you could use, something. Yeah. Like give me some feedback, what you guys want to see, because I already know Chris's heart. He wants to help people. You know my heart. I want to help people. It's all I want to do is I just want to help people create their vision and make it happen. Yeah. So thank you, Chris, so much for being on the show.
I'm literally working to help people.
The same way that we always do with the incredible words of Earl Nightingale in The Strangest Secret. Take it away, Earl.
Here's the key to success and the key to failure. We become what we think about. Now let me say that again. We become what we think about.
Thanks for listening to the Breakaway Wealth Podcast. Be sure to subscribe to this show wherever you're listening so you never miss an episode. If you want to start increasing your wealth building ability right now, go to community.createtailwind.com to join our free online community and get access to free, in-depth training designed to help you build real, lasting wealth. See you next week.